Hi everyone, welcome back to week 2 of Principles of Management Accounting. And in this week we're going to cover absorption versus variable costing. Once again, the notes for this is available online on Canva, and the textbook reading references is in the notes as well. But again, in this topic, the notes that I will be going through with you guys should be more than sufficient to get the hang of this topic. Alright, so let's start. So those just, again, as before, the layout of the notes is basically similar. Your pre-reading that you want to do, or your textbook reading, chapter 5 of our textbook. Again, there will be online questions, this multiple choice questions, which will be available online. It will be timed, and it will we'll let you know when that will be available, but this will be graded and form part of your year mark. And then again, there's a long question at the end of this module notes, which is not graded, but again, the practice is vital, because that gives you an idea of what to expect in the exam. Alright, so just the module objectives. We want to understand how absorption and variable costing are used in the context of reporting for financial accounting purposes and as well as management accounting purposes. We're going to distinguish between the two formats for the statement of financial performance or income statement. We're going to understand and apply the impact of the change in inventory levels on the net profit of both methods, and briefly discuss the strengths and the weaknesses of the two different methods. Alright, so quickly as introduction, you are supposed to be familiar with the different cost behaviors that we've covered in week 1. Please guys, if you're not familiar, please go and have a look at those videos again, and if you're still not comfortable, please let me know in the discussion forum what your problems are. Alright, so to jump into absorption versus variable costing. Basically, what it comes down to, absorption costing is, so firstly, when we refer to costing, we refer to the costing of inventory in management accounting. In other words, when a company produces a product, whether we're producing a can of Coke, the difference between the two methods is absorption costing will take into account all the manufacturing costs, i.e. fixed and variable costs into that can of Coke, and that will be the inventory price of that can of Coke, whereas variable costing will just take into account the variable production costs in this can of Coke. And effectively, just to summarize, absorption costing will, as I said, will be variable plus fixed, whereas variable costing is just fixed. So just a quick recap on what variable costs are. We've discussed the definition, but that's cost that changes with production. And the examples typically include material, labor, and variable overheads. And fixed manufacturing costs are production costs that does not change with production or sales. And these production costs typically include rent of the factory, the supervisor of the factory salary, and the electricity. Alright, so at a high level, the real difference between the two is absorption costing is what is required by IFRS, and that's all the costs, and variable costing, the name gives it to you, it just includes the variable costs. So absorption is variable plus fixed manufacturing costs, whereas variable costing is just variable manufacturing costs. Another word that's used out in management accounting circles, when they refer to variable costing, they also refer to direct costing. It's the same thing. So direct or variable costing is the same thing, where that's just variable manufacturing costs, and absorption costing is variable plus fixed manufacturing costs. Alright, I'm going to end this video there for now, and when I come baback, I'll discuss further differences between the two methods. Cool.